Hello friends. Right now you are seeing the candlestick chart of gold. Right now gold is in sideways pattern. This is the price pattern of gold. And here you see multiple resistance line and multiple support lines. Which one is the right one? We have this confusions and we always keep a buffer while setting up our support and resistance. Sometimes individuals follow support zone and resistance zone, isn't it? But there is a technique which will help us to set simple and easy to follow trading rules. It ignores price reversals, that is below the specific set limit. It has no time limit, no time factor in that. As far as price fails to change direction, the trend continues. What I'm speaking about? I'm speaking about a charting technique or charting method called point and figure chart. All that I'm going to discuss today in this session is extracted from these two books. What are we going to discuss about? We are going to discuss about point and figure charting technique. Very significant. It's used since Charles Dow days. Still, it continues. Many traders use this technique. What are the significance of this point and figure chart? How to construct this point and figure chart? How to set targets in point and figure chart, how to draw trend lines in point and figure chart, what are the various formations in point and figure, all that we are going to discuss in this session. So sit back, focus, let's continue. Plotting prices using point and figure method. How point and figure charts are created. We just need to understand how point and figure charts are constructed. We need not to understand the core crux because just understand the high level structure like how the point and figure charts are constructed because these days we have lots of trading tools, investing.com, tradingview.com. Wherever you go, you can find point and figure charting. But the basic crux I'll explain right now. For example, this is y-axis, this is x-axis. In the y-axis, we have price. For example, we are plotting for Microsoft. Consider today's price for Microsoft is 477. So right now, yesterday's price was 470. What is the box size here? It's incremented in $5. So the box size is $5 here. Always the reversal criteria is most of the time the reversal criteria is 3 box, but it's configurable. Whichever the tool you use, TradingView or investing.com, wherever you go, you use that specific tool. They'll give the option to decide the box size, to decide the reversal criteria, etc. In this example, my box size for this Microsoft point and figure chart is $5 and the reversal criteria is 3 box, meaning 3 multiplied by 5, $15. Assume yesterday Microsoft closed at $470. Okay. So we marked X yesterday. Now, today the close price for Microsoft is 477. So I'll mark another X. I'll not mark X here. Why? Because this Microsoft not yet attained 480. It's still in 477, in between 475 and 480. So I'll not mark X here. For example, tomorrow Microsoft reached 464. Okay, 464 is below this here, right? So is that less below 3 box? Right now the highest level is 475 as per the chart. 464 is less than the reversal criteria. Our reversal, what is reversal criteria? 3 box. 3 box equal to how many dollars? $15. Specific to Microsoft. Is that 464 less than $15 from the previous high 475? Yes, it does. So we'll start marking O's in the second column. Okay? So what happens if instead of 464, Microsoft moved from 477 to 467, tomorrow's closing price? So is that less than the high price, $15 less than the high price of 475? No, it's just $8 less. So we'll not mark O's. So we'll wait for the next day. In the next day, if it increases, for example, if it increases to 481, then I'll mark an X here. I just given a flow chart here, how to decide or draw point and figure chart. It's a painless process. We already have the techniques and tools for that. But in case if you are interested, of course, I have the notes attached in the description section of this video. Please download the notes and go over this flow chart, which clearly explain how to plot the point and figure chart. Similar to bar chart and candlestick chart pattern, there are formations and patterns we can follow in point and figure chart as well. So these are some of the patterns. The first one, this is the breakout of a triple top. This is ascending triple top, spread triple top, upside breakout of symmetric triangle, upside breakout of bullish resistance line, upside breakout of a bearish resistance line, upside breakout of a ascending triangle, bullish catapult. So these are multiple formations and patterns used in point and figure. And how can you refer this? Pretty much in the notes section mentioned in the description. Please download and make use of this. In all this pattern, one thing or two patterns pretty significant is ascending triple top and breakout of a triple top bottom. Basic logic is whenever X in the current column is one box above the highest X in the previous column, then we'll buy. Similarly, when there is O's, when the current O is one box below the lowest O, then we'll sell. This is the logic. With this logic, you can refer this formation and you can use it in your trading. How to plot point and figure trend line. Bullish and bearish trend lines are commonly used with point and figure charts. In this picture, we see the reversal. Its X's are bullish, O's are bearish. Whenever there is a reversal happen, in the subsequent column, one box below the top will start plotting. Similarly, after bearishness, and if it is continuing bullish trend, in the subsequent column, one box above the previous column will draw or will plot X's. Okay? So this line, this is 45-degree, right? This 45-degree lines are support lines. Only long positions are taken when the 45-degree trend line is up, and only short sales are entered when the trend line is down. Initially, while at the introduction I explained about point and figure chart, point and figure chart differs from traditional charting because it provides a rigid set of trading rules. For the most systematic trader, it will tell exactly what penetration of resistance or support level is necessary to generate a buy or sell signal, and exactly where the stop loss order should be placed to limit risk. It is this well-defined nature of point and figure charting that allows computer testing and evaluation pretty simple. Coming to box size of point and figure chart, the box size used in point and figure charts determines the sensitivity or frequency of signals. If the box size right now in this chart, the box size is $5. If it is $2 or $1, the reversals of the trend or sensitivity of reversal will be pretty more, which is pretty much you all aware of. Okay? So when we increase the box size, sensitivity will decrease. When we decrease the box size, sensitivity will increase. What are the various trading techniques we use in point and figure chart? Let us see one by one. In this technique, normally the basic point and figure trading signals are triggered on new highs and new lows by when the first column of X's, the current upswing, rises above the previous column of X's by one box. Sell when the filled column of O's, the current downswing, falls below the low of the previous column of O's by one box. This is normal trading technique. But in the first box, we can place a simple buy signal. However, when we place the buy here, our stop loss is right here. There is an excess amount of more risk involved, right? So instead of buying here, we can wait for next pullback and we can purchase it at 146, right at the level. We'll have some O's and then we'll have some X's once it reach 146, but now the risk is lower. Similarly, When we buy at 138, our risk is further lower. But there is a risk involved, like sometimes the price may not pull back. Instead, it continues the downward trend. So we may miss the opportunity. That is also need to be considered. In the second trading technique, a buy signal is generated right here. However, whatever we see here, similarly, instead of buying right here, we'll buy at the second pullback. Our entry is right here. This is similar to this point, right? Our stop loss is right here. And similarly, whenever there is a pullback, it's similar to bullish support. Whenever there is a pullback, we can add on. That is also another trading technique to be considered. Point and figure charting has two unique methods of calculating price objective. The horizontal count, which we are going to discuss right now. The next one is vertical count. In the horizontal count, we calculate price objective or price target similar to bar chart patterns or candlestick chart patterns. We follow the same consolidation, we follow the support and resistance. And here we have a formula. The horizontal target is achieved by using the lowest price, the price of the lowest box of the base formation plus width of the bottom formation multiplied by the reversal value. Number of box times the value of one box. In this point and figure chart, the box size is $4. First, we need the price of the lowest box of the base formation. Here we have a consolidation formation. With this example, let us try to set our price objective. Number of columns in this consolidation is 19 and number of column for this consolidation is 25. Let us see with 19 consolidation columns what will be our price objective and whether the price objective is achieved or not. First, we need the price of the lowest box of the base formation. Here, the lowest price is $570. The width of the bottom formation. With this bottom formation, the width is $19. 19 columns. And the reversal value, we know the reversal criteria is 3 in this case and 4 is the box size. 4 multiplied by 3, 12 is the reversal value. Now we know price which is 570. We know the width of the bottom formation which is 19. We know the reversal value which is 4 multiplied by 3, 12. Now we can arrive at the formula by replacing these values. Width equal to 19, reversal value equal to 12, 19 multiplied by 12 plus price which is 570. With that, we arrive at the first objective 798. Did we achieve the price target? Yes, we achieved our price target. Similarly, with this pattern, in the place of width, we can, instead of 19, we'll mention it as 25. And with that, we got a price objective of 870. This is how we calculate the price objective or target using the horizontal formula. The next technique to arrive at the price objective or target setting is a vertical count. The vertical count is a good tool for setting initial objective, but it is not a magic wand. As with the horizontal count, there is adequate time to identify the formation and establish a price objective before it is reached. The vertical count is a measure of volatility and can be used to determine the size of a retracement after a major price move. To calculate the vertical count, locate the first reversal column after the bottom formation. Where the bottom formation is formed, locate the first reversal column or the first reversal column right here. To do this, a bottom must be established with one or more tests, or a major resistance line must be broken to indicate that a bottom is in place. For example, if you see here, there is a resistance line, it's broken. How the vertical count objective is set? First, we need to identify, we have the formula here, we need to identify the lowest box. Here the lowest box is 20. Then the first reversal boxes. In this column, this is the reversal column. In this, we have 13 boxes. Box size in this chart is 0.25. So 0.25 multiplied by 13 equal to 3.25 multiplied by minimum reversal boxes, which is reversal criteria, which is 3 for us. What is lowest box? 20. The first reversal boxes 13 multiplied by 0.25, which is 3.25 multiplied by 3. 3.25 multiplied by 3 is 9.75 plus 1t equal to 29.75. This target is achieved right here. In the point and figure chart, how to determine the box size? Can we have a fixed box size, or can the box size be variable? Now there are some options present to have a variable box sizes as well. Why we need to have a variable box size? Because it depends on stock to stock, depends on commodity to commodity. The price and the intensity of price differs. So it will be appropriate to have variable box size. In the current day environment, in the multiple trading tools, we normally used to see variable box sizes only. What are the possible variable box size? Number one, we can have a percentage on the stock or commodity, whatever it is, which is option number one. Option number two, we can have specific multiplier on top of the average true range. For each stock, we have stock or commodity, we have average true range, which is called volatility. That average true range is multiplied by 1 or 2 or 3, whatever it is. A specific factor is multiplied with average true range, and based on that, box size is determined. Two options present for us. With this, point and figure charting ends. This is one of the significant tool in traders arsenal. Thank you for sticking till end of this session. The next session going to be very interesting, one of my favorite topic. Please consider subscribing to my channel. Thank you. See you in the next video. Bye bye.